All right, so now we're on to day 2 of the 7-day FX mastery. Let's go through some of the things that you guys would need to go through under the day 2 tab, which is some of the stuff we're going to be covering today. Major market patterns. There's a section once you go into day 2, the first one, it's going to be a downloadable file. Make sure to download this, read the instructions, it says make sure to download, print, and put into a 3-ring binder next to you while you do your trades to easily identify these patterns. So you just click on this, you download it. If you have a printer, just print it out. If not, just go to a place that you can print it out at, and then just print out this file and put it into the 3-ring binder. Okay, so make sure to go through all of these files individually, but we'll go through like the major market patterns during today's training. The second thing, there's another PDF file that is about continuation patterns. Make sure you click that, download, or you can click this button or click this right area right there, and we'll give you another file that's going to be talking more about trapping the price, which is something else we're going to cover today as well. And then for later on today's homework, we'll cover over that, but there's going to be homework at the end. Make sure that you put it in the comment section and it will be reviewed. Also on the Telegram group, that's basically post them on here, the homework comment section, and on Telegram. So you can post it on both. All right, so let's go ahead and get started. All right, so something that I mentioned while reviewing the homework for day 1 was to remove some of these indicators that are at the bottom. You'll see like a news area here. What you would have to do is you right click. Now I think it's one of these here. It's under, there's a couple areas. I think it's trading, and then it's like show news or something. Oh, events. It's under like show economic events. So you guys might be seeing this right here. You don't need to have this. Pretty much what you want to do is clear up your charts like mine is. Mine is very clean, very clear, easy to look at. So that's pretty much what you guys want to do, is have a clean chart. If you guys have lines going down your charts, all you have to do is right click anywhere on the chart, go to settings, and then customize some of the appearance. So the background has to be the same. Like right now, I just changed it as white, and there's like some lines that come out. That's because the vertical grids aren't white. So if I put this, now the vertical is good. Now I need to do the same thing for the horizontal, and now it's all white. So now it's very clean. So you have to have all of them the same color for that. So that's that. All right, so we're going to be covering first off with major market patterns. So there's major market patterns that I'm looking for. Major market patterns that I'm looking for. Let me change this. And what major market patterns are, they're patterns that I'm looking at when the market's going into an uptrend and then going into a downtrend. So let's see. Okay. So when the market's going into an uptrend, the 3 major market patterns that I'm looking for are going to be double top. Let me put that dash here. Double top, triple top, triple top, and then head and shoulder. right? So like an uptrend, we have higher highs, higher low, higher high, higher low, right? It's going into an uptrend. And what we're looking for is these major market patterns, which is a double top, which is going to look like an M pattern. So what we see is it comes down, comes up, creates like a high, and then that's when this pattern here would have 1, 2 tops. And that's why it's called a double top. It has a double top. Now, with this, it has a neckline. Neckline, make sure to get this down because this is pretty difficult for double tops. You're going to want to connect this higher, this previous higher high on this side. This higher high connected to the middle area, dragging across like that. I'm actually going to make this a red color for the neckline. So when you see this breakthrough, that's giving you a confirmation that it's getting ready to sell. So normally the distance from the high, this very top area, to the neckline, that distance there is about the distance that it should drop once it breaks the neckline. So something that I do is I'll have my target aiming for this price right here, whatever price that would be, that distance, that's where my price would be at. Okay. Isaiah mentioned that he was late, but better late than never. That is very true. At least you're on this live. Some people are watching on the recorded video, so it's good. Okay, so that's double top for an uptrend. Now, for triple top, what it looks like is it'll come down like this. It'll come back up. Let me actually make this color black right now. Come back up to black. And then it will come down, and then it breaks through the neckline. Now, the neckline with triple top, well, first off, we can see there's 3 tops right there. So it's just pretty much creating 3 highs. We have a high here, we have a high here, and then a high here. So not really a higher high. It's just an area that it's not going any higher. It's just kind of has that resistance area, which we'll cover over support and resistance after this. But we have the high here, and then what we're doing for the neckline is we're connecting this point here and then this point here, and then dragging it across. Now, what I've noticed from the previous training was some people had trouble with the triple top. What they were kind of doing was they were seeing it going a downtrend, and then they see they see this and they think that's considered a triple top because it's 1, 2, 3 highs. But what you're looking for is when it's going in an uptrend. So it has to previously have been going in an uptrend to spot the triple top and then go into a downtrend. So this would not be considered a triple top, this right example, only this left one. So after that triple top, so what you're doing is you're connecting this point to this point, dragging it across, and then now the distance from the top of this triple top to the neckline is about the distance that it should drop once it comes down. So then you would have your target at that. All right. Now, also something to know about triple tops is it's also considered like consolidation. You see, it's just consolidating. So it's consolidating and then it's waiting to break out. So then it breaks low, which means it's most likely going to create that lower low, then lower high, then lower low, and go into the downtrend. That's when you cut the downtrend. So that's That's what you're looking for on a triple top. Now, something to know with triple tops as well is sometimes you might see that it will create highs like that. It'll create that triple top, which is good. But this previous low right here would be a higher low. So sometimes it creates that higher low, but what that means is it's still a triple top pattern, which means we might be expecting a reversal. But what we're doing is now the neckline, it's still connecting this point to this point here. So now you connect from here to there, and now the neckline's like that. So once the price breaks through the neckline, then we're catching that for a sell. And then when we catch that for a sell, now the distance from up there to the neckline is about the distance that it should drop. So now the target's going to be a little closer, but your entry is going to be closer as well. So that's still fine. I actually personally prefer necklines that look like this or like this. There's sometimes necklines, it'll look like this. So this low would look like this. So now we're still, for this neckline, it's still a triple top, but the neckline, it's from this point to this point. So we drag it all the way across. And now your entry is really late, all the way down here. So you would have to wait. You would have to wait for it to break through, and then the distance from the top to down there would be the distance it should drop. So it does still hit like take profits on times like that, but I'd prefer getting in at a sooner time because you're more likely going to hit that take profit than when it's like all the way down here because it's already so low in the price. So that's that for triple top. Next is head and shoulder. So for head and shoulder, it's still going in that uptrend, but what you would see is now we have this very peak like that. And if you think about a head and a shoulder, let me draw like a stick figure on the right side. Many of you guys have seen this if you've taken previous training. But you have left, and then you have like a right shoulder. So this is like the head, then you have like a left shoulder, right shoulder. So there's like a very peak, but then there's left and right shoulder. Same thing with this. We have left shoulder there, the head is up here, and then the right shoulder is here. Same thing with the way you do the neckline with the triple top is you just connect it from this point to this point. So you're connecting the two lows in between the middle of either the triple top or the head and shoulder. So that's the neckline there. And same thing, if this is a little bit higher like that, if that low is a little higher, then we just connect this point to wherever that point is. And now the entry is a bit higher. See, someone asked a question. So when it breaks support, that's when you want to enter. Yes, that's when you want to enter in for a sell. These right here for an uptrend, what this is called is counter trend trading. Okay, so when the market's going in an uptrend, we're looking at areas to spot it going into a downtrend. Whilst most people are going to be placing buys, you're going to be getting in for a sell. There's a lot of people that lose in this area, but what you're doing is you're taking their money. So you're predicting that sell using this technical analysis, and then you catch that. Okay, we'll get into timeframes. Someone asked about time frame. We'll get into that after we cover over these. So let's get on to this next section. So that was for an uptrend. Now let's cover over a downtrend. Actually, let's look at the charts and spot an uptrend and then see that reversal pattern. So we'll cover over this section right here. That's why it was important and part of the homework assignment to be able to identify when it's coming up like that, coming down, creating higher highs, higher lows, all that stuff. Okay, so this section right here, if you can see, it created like a triple top. 1, 2, 3. Now, just because it created a triple top, we're still waiting for the break of neckline, which if we see, we have 1 top, 2 top, 3 top. What we're waiting for is for this point and this point for the price to break through and get in for a sell. So we can see it didn't do that. It continued to go up. Now it did do a triple top up here. We have 1 top, pretty much that's like a 2nd top right there, and then a 3rd top right there. Now neckline with that, let me do the lines. So 1, 2, 3. Now even in this area, you can kind of see it stop there, but then it kind of came up, but then it finally broke through. So you connect this point here to this point, and then you drag it all the way across. And then now you're waiting for that to break through. So once it breaks through, like in that area there, you get the distance from the top to the bottom, to the neckline, is about the distance that it should drop down. So we can see for this, if you were to place a sell in this area here, you would have hit your target. You would have hit your target and you would have profited off of this trade. Okay, so that's for triple top right there. Let's spot another area. I can see some on the backwards end. We'll cover over those, but okay, kind of this area right here. So we can see it's going in an uptrend. We have 1, 2, 3. So not always will these triple tops be even, but as long as they're pretty much like in the same area, that's fine. Now for neckline, we're connecting this point and this point, and we're dragging it all the way across. So think of it like it's consolidating at the very top, and then we catch it for a sell right here. The distance from the top to the neckline is about the distance that it should drop. So we caught that. There we go. Okay, so we already covered triple top. Let's cover over double top. And by the way, as far as time frames, you can look at these in any time frame, but the time frames that's recommended based off of this, I use it on the 1 hour to look for these patterns. So right now I'm on the 4 hour just for just to show you guys, but you can see it on 1 hour. You can see it on the daily if you want to, but the 1 hour is the main one that I focus on. Okay, so right here we can see it's going in an uptrend. Now this right here is pretty much doing, let's see who can guess which one this one is. Or not guess, it wouldn't be guessing if you know. So what pattern is this right here? I'm gonna mark off the tops. Okay, so, all right, you guys got it right, head and shoulder, perfect. So we have left shoulder here, head, right shoulder there. Neckline is this point here connected to this middle point from that head and the right shoulder. You drag it all the way across. And the entry should be here. Now the distance from the head to the neckline is about the distance that it should drop once it breaks. So if you were to enter here for a sell, which there's a tool right here that shows you like short position, long position. I mentioned in day 1 about shorts. This is like a short position. If we were to enter there, our take profits down here. I'll go into later on about putting stop losses, but if you were to enter here, you can see it didn't even go back. It didn't even have any drawback. It dropped down, hit this take profit over here. Okay, now we got to cover the double top because that's the one that's a little bit complicated. Okay, so this is kind of that double top area right here. So we can see comes up, comes down, comes up, comes down. Now there's a lot of wicks that happen up there, but overall it's like a double top area right there. Now what you do is you connect this point here, connected to this middle point here. And then you drag this across like that. Entry for a cell here. Oops. Entry for a cell there. And then the distance from up here to the neckline is about the distance that it should drop. So you can see it hit its target. Okay, so Trevor said, can you go to 1 hour and show us real timing? Yeah, that's fine. I can literally show you, just so you guys know, like I can go 5-minute time frame. Let me zoom in. 5-minute time frame. Okay, so if you could see right here, it's going in an uptrend like that. Head, right shoulder, neckline like that. Distance from the head to the neckline is about the distance that it should drop. So you can see I put that right there, perfectly hit it, and it hit its target. So like you can see it pretty much in a lot of areas, but you have to spot where it's giving you those confirmations, those reversal patterns. Like here you don't see anything. Here kind of like a triple top pattern. Neckline would look like that. Yeah, but you'll see them a lot of the times going into an uptrend, like this area right here, this double top pattern. So we have like left, 1 top, 2 top. We connect this point going down like that, being the neckline, and then the distance from the top to the neckline is about the distance that it should drop. So you can see it hit its target. So something that I suggest is back testing, doing what I'm doing right now, looking back and then doing it for yourself. And you can see how many times that when you see that pattern, it will actually hit its take profit. So like right now I'm on the hourly. Hourly, right here, this is kind of considered head and shoulder right here. Now, the thing with head and shoulders and like triple tops, this whole major market patterns is sometimes you'll even see like left shoulder, head, right shoulder like that. Right, we have left shoulder, head, right shoulder like that, and then neckline would look like this. Or if I zoom in even closer, we can see there's a left shoulder, head, right shoulder. And then necklines like that. And now the distance from the head to the neckline is about the distance that it should drop, which it did. It hit its target. But based off of this bigger one here, we can see left shoulder, head, right shoulder, break of neckline. From the head to the neckline is about the distance that it should drop once it breaks the neckline. So it broke through and it did hit its target. Price dropped and it hit its target. So you'll see that almost every single time that I point this out, it's going to hit its target. So let's see like another area. Left shoulder, head, right shoulder. That could be an area. Neckline like that. Broke through I'm sure that hit its target, dropped down. Yeah, but there's so many areas where you can spot those patterns. The main thing now is looking for those patterns and catching it when it's on the uptrend. Now we're going to get into the downtrend. Let me erase everything. So when the market's going in a downtrend, the patterns that you're looking for, instead of double top, now it's double bottom. Then we have triple bottom. And then, oops, added an extra P. And then instead of head and shoulders or head and shoulder bottom, it's called inverted head and shoulder. Inverted head and shoulders. So these are the ones you're going to be seeing on a downtrend. So that means for a downtrend, you have to see lower lows, lower high, lower low, lower high, lower low, lower high. And then double bottoms, it now has one bottom, two bottoms. And then neckline for this is now the exact opposite. Now you're getting this point here and this point here. And you're making a line like that. That would be neckline. Right there, connecting those 2 points. Once it breaks through, the distance from the neckline to the bottom of the double bottom is about the distance that should go up. Something you'll notice about the double bottoms is they look like a W. For double tops, they look like an M. So that's a target that you'll go after. Watch it hits, take profit. So that's double bottom. For triple bottom, normally happens is it will hit the neckline area and then it will actually create its triple bottom neckline. So this point and this point, drag it across. And then now we have that triple bottom down here, 1, 2, this being the third. You have to wait for it to break that neckline. Once it breaks the neckline, you're looking for a buy. So you would get in here. Not sure why it's not staying. There we go. And then the distance from neckline to the bottom is about the distance that it should go up. Okay. So then it comes up and it hits its take profit. Now someone asked if I can do it on the current price. I'll go through the current price and show you guys like when, like there might be a setup right now, because not always will these patterns present itself on the current price, but sometimes you might see it present itself and you're ready to enter into a trade. So for here, enter in here, take profit up here, and then that's its triple bottom. Now with inverted head and shoulder, now it's backwards. I'm gonna draw that stick figure again. So we have the head, then we have left shoulder there, then we have right shoulder there. So that's pretty much what it looks like. This middle portion is out like that. We have the left shoulder, head, and then right shoulder. Neckline is still going to be, it's still going to be this point connected to this point. And we drag that all the way across. And then our entry is when that neckline is broken. So with these like inverted or like triple bottoms, this neckline area could also be like a little bit lower. So it can create like a lower high right here, but you would still, you're connecting this point and dragging it across. So now the neckline is pointing down. Sometimes it'll be higher like that, still creating that left shoulder, head, right shoulder. You still connect this point to that very peak, and then you drag that coming across. So now the entry would be a little bit later, but your target is still from neckline to the head. This is about the distance that it should go once it breaks through. Okay. So any questions with these? Did you guys get it down? I'm about to cover over the actual on the candlesticks right now for the downtrend reversal patterns. Okay, so Anthony said GJ inverse head and shoulders on 1 hour. Okay, so we'll check it out right now. So GJ, we covered over the terms yesterday, GBP, JPY. So inverted head and shoulder on the 1 hour. Okay, so this, not so much. Yeah, it's not really showing that head and shoulder. In a way, if you're looking at it this way, where like that's a left, and then this is like its right shoulder here, you can do it that way, but overall, that's not really like an area. Give me 1 second. I need to make sure that that it's not possible to be unmuted. Okay. All right. So let me show like let me see the different currency pairs and see if I spot anything at the bottom. So, all right. So this area right here, if you see, it's, let me zoom out a little more. So we can see it's overall going in a downtrend. We have the low here, lower high, lower low, lower high, lower low. Okay, so right now it's at this bottom area, which is kind of doing like that double bottom. And then what I would do with neckline with this point, drag all the way across like that. And then now we're just waiting for this to come up, break above here, and then most likely the distance from here to here is about the distance it should go once it goes up. So then that's going to be our target area right there. But you're going to have to wait for it to come up and break that area. Then your entry would be here. So not always will these trades win, but your chances are going to be much higher with these. This is just one confirmation right here. You're still going to want to have more confirmations. But let's cover over like previous examples when it goes into a downtrend and then reverses. So like this area here, we can see it was going in a downtrend, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, higher low. And then this is when it breaks through. So if you see, this is the left shoulder, this is the head. You need to unlock your iPhone first. Give me 1 sec, my iPhone's talking to me. Okay, so we have the left shoulder, head, right shoulder. So this is inverted head and shoulder, and then neckline is going to be this point connected to this point. Drag that all the way across. And now the distance from the neckline to the head is about the distance that it should go once it breaks through. So we can see it did hit its target. So let's see, someone said, so with the pattern, you can calculate your profit, but what about loss? So with stop losses, we'll cover over that later on. That's not gonna be in this training, but I'm just mentioning as far as like the breakouts and the distance, you can even have like a tight stop loss. I'm not saying this is what you should do, but you can even have like a tight stop loss right when it breaks through, and you'll see that the market won't even really like come back and hit it. But your stop loss isn't going to be like super tight. We'll cover over like risk to reward and all that stuff later on. You don't really see that drawdown coming down. Someone said, with drawing the head to the neckline, does the line have to be perpendicular? No, so I'll cover over right now after this section about like support and resistance and how to properly do your lines. And then we'll cover over like trapping the price. But let's get some other patterns. So we have head and shoulder. Let's spot like a double bottom pattern. So right here, double bottom pattern. So we see lower low, lower high. Actually, this might be considered like a triple bottom. Yeah, triple bottom. So this point connected to this point. So this is one of those occasions where it didn't hit its take profit. I can already pretty much tell the breakout. So it didn't hit that take profit level. Overall, it did go into that uptrend, but we can see it came down, then it came up. So depending on where the stop loss was at, it might have hit, but this is spotting out like that triple bottom pattern. Let's see. This is kind of a head and shoulder, left head, right shoulder area. Okay, so this is double bottom right here. So 1, 2, and then it breaks out, continues to go up. So from this point, drag across like that. So it's showing that double bottom pattern. From that neckline to the bottom is about the distance you should go once it goes up. You could see it did hit its take profit. Let's get one other one. Okay, so let me quiz you guys. So what pattern is this right here? What pattern is that? Janishka got it right. Steven got it right. Just forgot to put head and shoulder. Inverted head and shoulder. Good, good. Okay, so everyone got it right. Left shoulder, head, then that right shoulder area. Neckline is going to be from here, coming all the way across. And then you can see it broke out right there. The distance from neckline to the head, about the distance this should go once it breaks through. You can see it hit that take profit area. That was good. So when doing when doing major market reversal patterns, what you're mainly doing, because you're looking at this on the 1 hour, this is what I like looking for. So I'm gonna draw like an example. Let's say we're looking at the bigger time frame, the daily time frame. On the daily time frame, we see it's going down, coming up, coming down, coming up, doing like that lower, that downtrend, the bearish trend. So it's doing a lower high, lower lows. So most likely in this area right here, it's going to create a lower high. So when it creates that lower high, on like the smaller time frame, 4 hour or 1 hour, we'll be able to see that pattern in this area here. But let's say this is a daily, so we see it from far away, but then when we zoom in closer, what we're going to see is this is actually going in an uptrend like this. On a smaller time frame, we'll be able to see more candlesticks, and we'll see this go into an uptrend. Let's say we see this go into an uptrend, left shoulder, head, right shoulder, neckline, and that's when we catch that for the sell. And you would know from here to here is about the distance that it should drop. Normally that's like at least it'll drop that much, but you can still know that your chances of it continuing to drop down are much higher than it going up. Okay, so that's pretty much like how I like seeing when it's going in a downtrend. I look for those patterns in areas where I know it's going to be going down. So let's see, Trevor said, any advice on getting over the stigma of having to line up your trend lines directly with candlesticks? Okay, so that's what I'm gonna cover over with support and resistance, which is the next section, how to properly draw your lines. A sec. Let me make sure I have my muted. Okay, and then he said how you draw the line between finding a market pattern by making trend lines conform to what you want to see. So the thing is, you're looking for the patterns. You're looking for these patterns, and you mix them together with trend lines, which we're going to cover over like support and resistance right now. But pretty much, Trevor, if this next section with support and resistance doesn't answer your question, then let me know like what exactly you're having trouble with. But this next section is going to be support and resistance. Support and resistance. This one is support and resistance. So the way that I like saying support and resistance, what it is, all it is this line right here. It's all lines, okay? And support, if you think about inside of a building, we have, let me just draw this stick figure here. Make it a little more fun. Okay, so we have the floor being the bottom, and then we have the ceiling. So support is like the floor. So support is like the floor. It's the bottom of the price. Okay. So let's say like the current price, we can see like if I look to the right, it's at 1.19. So we have like the support being the bottom, and then resistance. Resistance is like the ceiling. Resistance is like the ceiling. It's the top of the price. Okay. So support and resistance, what it's doing is it's helping you predict what happened in the past, and then most likely in the future it's going to present the same thing, what happened in the past. So what we're doing with these lines is we're looking at previous price action, and then we're predicting what's going to happen in the future with these lines. And the way to do that, let's say we have an uptrend. Normally what's happening in this uptrend, this very peak of the mountain is going to be what's called a resistance, like that ceiling. And what's happening is it breaks through the ceiling and it goes to another ceiling. Now, previously, it could have been like a ceiling from past price movement. Let's just do it off of this. So we have the ceiling here, and then usually when the price comes down, it'll come down and it'll bounce off the floor. Not always will it hit the floor, but we know which room it's in. So think of it like a building as well. So then when the price comes up, it'll hit the ceiling and then it'll come down to the floor. And then for uptrends, what's happening is it's just breaking through ceilings. If it doesn't break through the ceiling, then all it's doing is it's like creating a high, and then let's say a low here, and then a high here. And then we're waiting for it to break the floor or break the ceiling. So let's say with this one, it breaks the floor. Now we know which floor it's going to be going to next, most likely. Someone asked, how do we know if price is broke? So you know if price broke if you see it go lower. And I'll go through the candlesticks and show you guys what it looks like, but it'll go through the floor, and then most likely that next target is going to be the next floor. And usually that next floor is about, like, let's say this is a triple top, the distance from here to here, the top to the neckline, about the distance that it should drop down. So that's where our target would be at. But let's say it comes down, hits the floor, and then for lower highs, it will come back up, create a lower high, but it will hit the ceiling. So now it's on this floor. And then for downtrends, you would notice that it breaks through floors and then comes back to ceiling. Breaks through the floor and just continues to do that. So with support and resistance, this right here is a horizontal. It's a horizontal support and resistance. So for horizontal support and resistance, that's just catching it when it's breaking, and the line's going sideways like that. Let me see what the questions you guys have. So I think we would need 2 more confirmations to know if price broke. So one of the confirmations being that candles, the candles below that, there is wicks that happens sometimes where it will like do a fake out, cover over fake outs and all that stuff as well. See, someone said, can some of these lines act as major support and resistance lines in the future? Yeah, so there's going to be like major support and resistance lines, and then there's going to be like not so, we call them minor support and resistance lines. Do you recommend closing if it comes back to the main resistance? If it comes back to the main resistance, no, you don't have to. And based off of like the strategy, once you get in, you're just holding on to the trade. You don't get out if you see some type of reaction. You just enter into your trade and stick to it. Okay, so with an uptrend like that, you know, you have to pretty much determine which floor you're in, and then be able to know how to place your trades based off of that. So let me actually go on the candlesticks and show you guys what I mean by that. So all right, let me mark off. Now for the support and resistance, I like doing it on the 4-hour time frame. And what you're doing is you're just gonna get like an area. So same thing with like getting low, high, higher low, higher high, higher low, high, higher low. Okay, if you can see already with some of these areas, let me do this line here, coming across. Now sometimes you'll see where it passes through and then it continues to go up. That's still fine. It's still, you know, that floor area. You can see I did my resistance line up here. Resistance being like that ceiling. Right here, it created like a high, then a higher low, and it broke through, and then we have a new area here. And you can see with this new area here, it came up. It didn't come all the way down to the floor, but it came back up, hit the ceiling, came down to this floor here. So it pretty much hit and broke through, created a new ceiling up here. And then it came down, hit the floor, came up, hit the ceiling, broke through the floor. Let me drag this across. You can even see this floor right here, hit this floor, came up to around that ceiling, came through, hit this floor being that support, came up, came down, hitting like support. And then pretty much what you're doing is just identifying which floor it's in. So like right here, this was previously resistance, then it was support, then over here, it hit like support here, then it bounced up. You can see if I drag this line all the way across, this area here, even though if it did pass a bit, what it pretty much did is it hit resistance and then it came down. And these lines you can drag all the way across. So you can see just by knowing that resistance right there, kind of plays like support here. You can even see some of these areas. So it was once resistance over here, it played a support over here, but then in the future, it came over here, hit like resistance, and then it bounced down. And like, let's say this floor right here. So you can see it's this area here. This previous floor over here hit like support on this side, and then it came up like resistance there, and then it came down like that. So then most likely, what you can actually see, you zoom in, came up hitting like that resistance, and then it's dropping down. So now we know overall it's in a downtrend, what floor it's in. And that's pretty much what you're getting down is identifying which floor you're in. One said, do you recommend closing it if it comes back to the main resistance? Oh, I think I read that earlier. Okay. So with support and resistance, there is like those major and minor support and resistance areas. I'll cover over that right now. Is you can find support and resistance, same thing with like head and shoulder patterns and like all those major market patterns, you can spot them on the bigger time frame. But what you're doing now is you're just going to figure out which time frame you want to take. And I normally use this off of the 4 hour. That's because I'll get the 4 hour, spot my support and resistance areas, and then I'll look for the major market patterns after that. So one said, pretty simple. Anthony said, can putting support and resistance lines on the wicks give a more accurate pinpoint? No, so putting it on the wicks is not accurate pinpoint, which is, but we're gonna cover that after this next section. So I'm gonna erase everything. And for support and resistance, I mentioned there's horizontal, but then we also have trend line support and resistance. So let's say it's going in an uptrend. We have the low, we have the high, we have the higher low, higher high, higher low, higher high, higher low, high. Okay. So we have this uptrend here. Now, this next one is called trend line support and resistance. And for trend line support and resistance, what you're doing is you're now connecting the low to the higher low. You connect this point and this point, and you're dragging this line all the way across. And what this does is it helps you see when the market's going to come down and hit that trend line support and then come up. So then when the price comes down, there's a chance it's going to hit here, that trend line support, and then bounce up. Now, there's also with trend line support where there's resistance as well. So you can connect this point, these high areas, and then coming across like that. Remember, the resistance is a ceiling, and then support is a floor. So this top area is the ceiling, this bottom area is support. Now, for a downtrend, let's just do it like this. So we have support here, resistance here. Let's just do that horizontal support right there. And also it plays this neckline. We have resistance up there. So for downtrends, you're gonna see this come down, come up, come down, come up, come down. So what we first do is we get this high and then we get this lower high. And since we know it's on a downtrend, we get that resistance, this point and this point, and then we drag that line coming across like that. Now, when the price in the future comes up and hits this line, then there's a chance it's going to hit it like resistance and then come down. And then when price comes back up, hits that line, most likely will hit it and then come back down. So with this, we can also get support as well on the downtrend. This point here connected to this lower low. We just connect here and we drag it all the way across. And now we have the lows. Okay. So now we have support, resistance on that downtrend. Next thing is we're going to mix it all together. We're going to mix it all together and then identify how to place the trade. So I mentioned that we normally get 3+ confirmations before entering into a trade. 3+ confirmations is what is pretty much all you would need in order to be confident with the trade. And already with the 3 things that I've taught you guys with support and resistance, horizontal and trend line, that could be 2 confirmations. Major market patterns, that's another confirmation as well. So just those 3, that's pretty much enough to be able to enter into a trade. But let's say this happens here. Let me do my horizontal lines like that. Resistance, support, support, resistance. Resistance, support, support, and then coming back. So if you see this area right here has 2 confirmations. If I was to get in for a sell here, this already gives me that 2 confirmations, still not enough. We would need 3 or more, but we know that with support and resistance, horizontal and trend line, we can see that this resistance is coming down like that. Price comes up, we know it's going in a downtrend. So we know price is going to come up, create a lower high, but it created a lower high right at what was resistance here and resistance here. So it hit double resistance. And then right here, price dropped down. So we know that if we enter in for a sell here, we know we can target this low right here because it's already a support area there. It's already in a downtrend, and that's a support right there. So we can enter in for a short, let's say like that. And pretty much your chances of winning that trade is going to be high. Now, remember I had mentioned earlier about going into the daily time frame, and if you spot like a triple top pattern or something in between right here, like let's say it's going into an uptrend. I had done it with the head and shoulder pattern, but let's say it's going in an uptrend and it does a triple top right there. And then we do our neckline and then it comes down like that. This is pretty much how I do it when I'm looking out, but then I'm getting into a closer trade is I know it's overall going in a downtrend. Now, just with these 3 right here, I have, that double resistance, but then I can also get that triple top pattern break of neckline, and I would know my chances of winning are now going to be higher because I have 3+ confirmations. Does that make sense? Put a 1 if that makes sense. Now we have a good amount of people in here, so And if it doesn't, let me know as well. If it's not making sense, someone put 0.5. Okay, so pretty much everyone put 1. I got one person that put 0.5, so pretty much halfway. And most of this, you're gonna get it down once you practice it onto your own charts. But what I would suggest is going through this over and over until you get it down. But all you're doing is you're just getting support and resistance lines. Support and resistance lines and getting 3+ confirmations. We'll get into more confirmations later on because these are not the only confirmations. There's a lot of other ones that we'll get into, some more advanced strategies. This is more of like that basic support and resistance strategy. Okay. Someone said, do you let your trade run all day? I let my trade run however the market like reacts. So yeah, I would let it run. If it doesn't hit my take profit throughout the day, I'll just let it run. Now it also varies based off of time as well, because sometimes like at 2 p.m. Pacific Standard, the price will change because it'll go into a new Forex calendar day. So I'll exit out right at 2. Okay, so chart examples, we'll do that. Okay, so right here, I mentioned that we get the low and we get this other low, and then we drag this line across. And we can see with this, it kind of passed through. Sometimes when it passes through, like that means it'll only be valid for that current like smaller trend. So if I was to connect this point here and this point here, we can see that with that line, price came down to this area, bounced up. It came down again to that area, bounced up. Came down again, bounced up. Came down to that line again, bounced up. Came down here. It was just like consolidating here. But then we had like a strong resistance area right here. And then price then decided to go down. So this is like how to do like a stronger uptrend line. Now, when the price drops down, but it's still on an uptrend, like on the bigger time frame, because on the 1 hour, this would look like, it would look a lot better. We would be able to see more of the movement on the 1 hour, but because we're on the 4 hour, we see the bigger movement. So we can adjust from this point to this point here, and then we drag it all the way across. So you could see just by putting these 2 points, I'll do it this, so this point and this point, we pretty much were able to predict this area here, this area here, this area here, and kind of that area there, but then it finally decided to break through. So yeah, Brandon said 4 touches, 6 touches, yeah. So it touched multiple times, and then it continued to go. Now we could, because this is a low, we could also adjust it here. You guys will see inside of the PDFs, there's something called like the fan strategy, and it's pretty much doing this. The fan is more of like a advanced type strategy where it's like a Fibonacci type thing. I don't really use the fan Fibonacci, but this is pretty much showing us like what that image will show you inside of those PDFs. So you can see I connected this point, but then if I connected that to this, then it helped me predict this area here and a little bit right there, but then it decided to break through. Okay, so that's just showing you on the uptrend. Now going into a downtrend, like in this area here, this is where current price is at. So we connect this point, that you can see that pretty much helped predict this area and that area down there. Just by connecting this, just by connecting there to here, we're able to predict here and here. So that's what the resistance line helps out with. Helps out with being able to see where that resistance is at. And when price is going in a downtrend, I'm focused on resistance. So I'm gonna write that down. When price is in downtrend / bearish, I'm focused, I'm gonna do it another way. I'm focused on resistance. When it's going down like that, focusing on the resistance, so not really the support. I did show you guys how to do the support, which it can come into play, like connecting this point, that point, and then we have possibly another area. So just by putting like this area here, this area here, this area here, like that would have been able to help me out, predict when it was going to come back up. But I had mentioned from the first day training that we don't place buys on that downtrend. We're not placing buys in these areas here coming up. We're placing sells on the tops, buys on the dips, buys on all these dips, these areas here. So that being said, we're not focused on this support line. That's out of the table. We're mainly focused on resistance. And when price is in an uptrend, price is in uptrend / bullish, I'm focused on support. And this applies to support, trend line, and horizontal. Same thing with resistance, trend line and horizontal. Like this horizontal was once support. It broke through the support, came up, but then it broke through, came up, and then that's what was once support is now resistance. Because it broke through the floor, it's now resistance. Then it came up hitting like resistance, and then it dropped down. Same thing with right here. It kind of came up around where that resistance line is at. Came up, hit like around double resistance, and then it dropped down. So those are good areas to get in for a sell. Just those two alone, you can already become profitable. But I'm still looking for more than that, just so I can get confident with my trading. And there's a higher chance of me winning my trade. So some resistance lines are going to be steeper than others. Sometimes it might be like steep down like that, or sometimes it might be just a little bit going slanted like that. So an example being this area here. If I connect this point here, connected to here, dragging all the way across, we can see it's creating lower highs, lower high, lower high. But this point here, just by connecting these two, we were able to predict this area here, and that kind of created like a double top there. I can tell if we were to zoom in and give us that pattern. Right here, like a triple top. So that's why I like looking at these areas, because then I know if it's going in a downtrend, I'm looking for like a pattern or something, some type of confirmation, not just this, more confirmations to show me that I should be getting in for a sell. Not just because it touches a line, I'm going to get in for a sell. That's what some people get wrong, is you don't just get in just with that one confirmation. So example being like if I zoom in, right here it shows me 1, 2, triple top pattern. We have neckline like that. From head to neckline is about the distance at least that it should drop. We hit the target, we made money. Now, that's 2 confirmations right there. This is how you also add more confirmations, which is, this is part of the next section, which I'm gonna cover, which is chopping the price. So what you're doing is you have, say, the low here, high here, low here, high here, low here, and then back up here. So we're also doing support line like that. We're getting the support line, dragging across like that. And you can see just by connecting this point here to this point, it helped us predict this area here, and also right there, bounced up, but then it had a resistance. So at one point right here in this area, it was consolidating because the price was trapped. The price was completely trapped in this area where it had the resistance, but it had its support. So it didn't know where to go. And then it finally broke through. And then it showed us, it confirmed that it was going into a downtrend. And if you can see just with support and resistance up there, resistance here, hit support here, came up to resistance, broke through. Let me get a couple other support and resistance lines. So pretty much that's what happened. You would be able to predict when that was going to drop. Same thing with this area here where it created like a double top. You can see it was already hitting that resistance, which there's a chance it was going to drop, but that's not the only confirmation. We can see this was going up like this. And for this one, I'm actually make it red just to show the difference between this left one and this side. So it came down like that, came up. This line's still valid. Actually adjust it a little bit lower. So price came down, hit support, came up, hitting like resistance. So it created like a double top pattern like that. But at the same time, this neckline, it's pretty much going like that. So it breaks through. We already know the distance from the top to the neckline is about the distance that it should drop down, which was pretty much that distance that it should hit the support. Price came down, hit its target, came back up, hitting like resistance, came back down. But not only did that double top give us a confirmation, because we have double top, here's the two different confirmations. There's actually three that I can see. So we have double top confirmation. It was going in the uptrend, double top. Another confirmation was hitting resistance on downtrend. That's the second confirmation. And then something else would be support line on the trend line. So support line, you're connecting this point here to this point here, the low to the higher low. And just by connecting these two from here to here, that pretty much helped predict. If I zoom in, you'll see it helped predict this area here. It hit, bounced up. It also kind of hit right here a little bit, and then it bounced up. So it like hit here, then bounced up, and then it finally broke through. So not only that, not only these two, it broke support line on uptrend. Okay, so then right there we have three confirmations. That alone would be able to help us out with knowing we could have gone into a trade here and traded in for a sell and then cut that coming down. Now back in this area here, I'm gonna connect this point here to, well, I already know if I connect it to this one, it already passed through. So I'm gonna connect it to one closer. And you can see with this one, it already passed through on that one. Pretty much it created like a double top kind of right here, like a double top. This support line hit like resistance That's what you'll notice with these support lines as well. Sometimes it gets broken, but then it'll come back hitting like resistance. So like right here, if it breaks through, it could have came back up hitting like resistance on that trend line. Because it was one support, sometimes it comes hitting like resistance. So what I actually see with this is none of these, but what I do see is this right here. This point to this point, dragging it across like that. So just by connecting this point and that point there, it helped me predict that point there. So that's still a support line in an uptrend. It still did its higher high, higher low. Let me actually change the color to that. So higher high, higher low, higher high, higher low, higher high. You can see right here, it created like a double top, came down, came up, came down. So we have that double top neckline like that. Price broke through, price came up, hitting that resistance. Now the distance from up here to, yeah, this is a double top. So distance from up here to the neckline is about the distance it should drop. So it hit its target already, but we already know that we have a much bigger target because it's already in the downtrend. So we can even kind of consider this like a triple top, like 1, 2, 3, even though if it did like a higher high. From that distance coming down like that, we would have hit its target. But we know overall it should be hitting like at least this support down here. It's pretty much everything has been coming up, hitting that area, hitting that support, coming up, hitting that area, hitting the support, hitting the area, hitting the support. So I know this might look like a mess, but if you were following through, you'd be able to understand that just with support and resistance, that can help you out, change your game up like crazy. Okay. So someone said, so your third confirmation are patterns and double support and resistance. Yes, so those are 3 confirmations. Mr. J said, badass effing skills. Cool. I know, like when people are hearing this for the first time, they're open to actually seeing it. For me, I'm spotting these patterns like pretty quick because I've been doing it over and over. So I see it like right away. And when you see me do my charts, I'm not writing it down like this. I already know what I'm looking at, so I'm not drawing all these lines. Because like in my head, I'll see an invisible line of this coming down like that. So then I'll know to get in right here for the sell. And then I catch that. The only thing is like, usually I'll get this line, like the distances, to know where my target should be at. But that's pretty much about it with that. So that's that section. I know that was just this section here. That shows you that there could be a lot of market opportunity just in like a smaller area. Same thing with like this area. I just broke this entire area down. When there's big movement like this happening, I'm not really looking for trades when this is happening. When that's happening, you're just kind of like waiting for it to settle itself back in. Think of it like crypto, like Bitcoin. When it spiked up, there's not really much trading opportunities. And by the way, I mentioned in the training that this stuff also applies to the crypto market. So I'm actually doing it just so you guys can see it, but it applies to stocks. You do indexes, like everything that I've shown you guys applies. Let me actually go to my main one. No chart. We'll go to my main one and show you guys my markup, kind of when I got in and all that. So see if it's still there. Okay. So very simple analysis right here. All right, so that spike up that I was talking about, let me move everything. That spike up that I was talking about, we can see that it was going in an uptrend like that. Really, really strong uptrend. So then came down, came up like that, created a lower high already, just kind of confirming that it was going to continue dropping. Lower high, lower low, lower high, higher low. But this area right here is like resistance like that. But anyways, this right here, you can see this is like it's support right down here. Price was just dropping down, coming up, dropping down, coming up. That's pretty much what was happening here. Some people in this area thought that it was going to have like its breakout and then continue to shoot up. But it broke through the support. It broke through that support and it dropped down. So I had actually got in right in this area right here. You can see came down, came up, creating like a resistance area. Came down, came up like resistance, came down. Pretty much this is like a support line like that. So I was just trapping the price until it broke out. And I actually got in right in this area here. And I just caught that going up. And then I was careful for this support right here because that support is now resistance. It could have hit this area and then dropped down. So this resistance line that I had drew right here, it was kind of to confirm if it was going to continue going up. You could see I had gotten in again right here and I continued writing that up. With this area here, we could see it like came down, came up. I thought it was going to drop down, creating like a head and shoulder pattern like that. I thought it was going to create like a head and shoulder pattern and drop down, but it just continued to write up. So it's still writing. Now, because of past performance, we're still getting like support and resistance. Remember, support and resistance, we can look in the future. So, you know, most likely it might hit this area here and have some reaction because it's a strong resistance area right there. Same thing with, if I zoom in, there's another support and resistance area right here. So if price breaks through, then it can do something like this. It can go up, hit, and then continue to go up. Right, so support and resistance is important. It might look like a big mess, but once you get it down completely, it's just going to help you out so much. So practice, practice, practice. So let's go back to Forex because that's the main source. All right. So now look at this area right here. This point helped predict this area here, this area, this area, this area. Look at all these areas that it helped predict just by connecting those 2 points. 3, 4, 5, kind of 6, kind of 7 right there. Who can spot the pattern that we see up here? Let's see who's the first one. Head and shoulder, perfect. Got it right. On a roll. So far, there hasn't been anyone that got it wrong. We see left shoulder, head, right shoulder, neckline like that. Head to neckline is about the distance that it should drop. We can see that price did come down, hit that target. Okay. Now, I'm gonna get into trapping the price, all right? So trapping the price, and all this stuff is gonna be inside of your PDFs, by the way. It's all laid out pretty much how how I explain it has more wordings in there, more terminology, stuff that doesn't really, you don't really need to know it too much, but it just advances your learning. The main thing is if you can mark it up, then you're fine. You don't need to know, like, you know, with like knowing bullish and bearish, like you don't even need to know those terms in order to make profit. Like they're just extra terms. So with trapping the price, what it is you're just getting areas of like support and resistance. Support and resistance. So if I get this high connected to this point here, we have now a resistance area here. But if I get this low here connected to this support, now what's happening with the price is it's being trapped. It's in an area where it's ready to burst out, either continue going up or come down and go into the downtrend. Normally you'll see these areas here, these like consolidation kind of trapping the price when the market's pulling back. So what a pullback is when the market's, like, let's say it's going in a downtrend. We have the low, we have a lower high, lower low. When it's pulling back like this, you might see it do this. And then finally do its breakout. So then what we're doing is we're trapping the price. We're getting the support line like that, and we're getting like a resistance line like that. And all we're doing is we're trapping the price. So then we know, like, if we have a resistance line like that, trap the price, then we have horizontal like that, we know to get in when it breaks out. And inside of like the PDFs and the training, it talks about all those all the different patterns. Now, do I need to memorize the names? No, I don't even have them like fully memorized. I just know the type of patterns, and I know the distance that it should go. So normally, like, let's say a pattern like this, from the very top to that bottom, we're going to see that distance, it should be at least what it should come down to. Then we would know our target. And then we would take profit on that. So, so I'm actually show you guys on the charts right now, but there's different types of formations of trapping price. Like this one, you can see it was coming down kind of into like a wedge. I know there's like, this is like ascending wedge right here. There's like descending wedge, which will look something like this. Then usually after that, breaks out like that. So this one's the triangle. The wedge is more of like, sure, I did that one wrong. But I'll show you guys on the chart pretty much how to be trapping the price, and then how I do it looking from a bigger time frame and then getting closer and closer. So trapping the price could be areas like, let's see. So even areas like this, we have this point here, 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 there. Okay. So from this to here, we have resistance. From here to here, we have support. That's trapping the price. Price broke out. Chances of it going up are much higher now. So like another area of trapping the price is like here, which this is like a head and shoulder pattern, but it's, even with head and shoulder pattern, it's still considered trapping the price. You're still getting like that resistance line. And then the only difference now with trapping the price is we're getting the support line. So for this, the support line looks like that. So the price could have, you know, what it did is it broke up. but it could have broken down and continued to drop down. But we already knew that this was a pattern that was showing that it's going to reverse. So let's spot another area here, like this area up here. If we just get support like this bottom here, drag it across. If we get this resistance, that's trapping the price. Price broke through and dropped down. So let me spot like a good wedge area where, like, let's say if it was an uptrend, you're trapping the price. So let's just do it off of this area. Say this is going in an uptrend like that. I'm gonna zoom in, and we do have like this being like the support, but then we have this being like the resistance. It's not really trapping the price because it's more like wide open. Trapping the price is like prices coming down into an area where it's ready to burst out. So kind of like this area here, where you see support like that, but then we have this area like that, where it's trapped like this. And then it broke through, came back like support, and then just continued going into the uptrend. Someone asked, do I use a monthly? Sometimes I use the monthly, but not really. The farthest that I'll go out to is like the weekly. But that's if I can't see what I need to on the daily. And we'll get into that in a bit. So let's see another area of trapping price right here. Resistance like that, support like that. So price was trapped. It could have came up, continued to be trapped, and then break down below, and then continue to go into the downtrend. But what happened was it broke towards the upside and then continued going up. So what I do with trapping the price is I'm about to erase everything and show you guys the different time frames that I use are going to be the daily, the 4 hour, the 1 hour. Usually the very lowest would be the 15-minute. So daily, 4 hour, 1 hour, and then 15-minute. So if I go onto the daily right now, this is what I'm doing to chop the price based off of where it's currently at. So from what I see right now on the daily, we have resistance like that. Now I need some type of support. I need something to trap it. So I'm looking out, and that's why like sometimes I'll go into the weekly. That's what I mentioned earlier. Sometimes I'll go into the weekly just to see farther, but I can see it from here. So like at one point, this was trapped. At one point, the price was trapped like in this area here, and then it broke out. But throughout this entire thing, like the price was trapped over here on these areas as well. So now we don't really have like a support trap. If I zoom out a little bit more, we do kind of have like this area here, like support coming all the way down like that, but it's going to be a while until it hits this area and then actually be a trap down there. So go down into the 4 hour and look at what we see. So four hour, what we have is we just have that low right there. So if it breaks to the low, we don't really have like that low area, that low support to base off of. Let's see. We can actually get this would be a support to go off of right here. So if price continues to break through, that can be a target where most likely it's going to hit, probably come up, maybe do something off these lines. So that's why support and resistance is important. You got to know which level it's in. Someone said, can that be a very big head and shoulder on USD JPY? Let me see if you're thinking about the daily. No, I don't see any big head and shoulder anywhere. Yeah, but let's say like if we were trapping the price in this area over here, what I would do is I would connect this point here to this point and then drag it all the way across. You could see all these areas where it hit like support, but then we have resistance like that. So that price was trapped right there. It had nowhere to go, it's ready to burst. And then it bursted out right there. We got in for a sale and made money off of that. So there's multiple areas where you can get that like chopped price, even right here, just by connecting this point and this point. It broke through, but then price came up hitting like resistance, and it did hit double resistance right here. It did hit double resistance because this trend line support, once that trend line support was broken, it's now resistance. Then it broke through, hit that, continue going down. So that's pretty much it with trapping the price. I know now it's getting towards the end of the training. Kind of skip through break this time because we're super focused. But do you guys have any questions when it comes to trapping the price? Okay, so I'm going to check out a different currency pair right now and do trapping of the price. Okay, so let me erase this, go on to the daily. All right. So we can see with this right here, drag this all the way across. Like that. So this line right here wouldn't really be considered part of trapping the price because the price is already below that. So trapping the price is more like that. Because now we have that support down there, but then we have like a stronger resistance up here. So now it's trapped. That means most likely if it comes up here, it might come down and come up. And then now we would have like a newer area to trap once it passes through. But it would have to break through the resistance. So let's say like right here in this area, if price broke through and then came back down, we can then adjust the resistance up like that. And now it's still trapped because there's a chance it might come up, hit that resistance line, and then break through. Same thing with when it breaks through, we can then adjust it to this area here. And there's still a chance that price can do this. It can hit that resistance line, come down, come up like that, and then go into the downtrend, and then meet up with this other one. So that's kind of like the whole thing behind trapping the prices. you're looking at areas where it plays like a strong resistance and strong support. Okay, so that's just like a random markup. You know, it might not even do that, but just showing you guys based off of where it would hit, how I would draw my lines. Okay, so one last thing before we get off today that I'm going to cover is going to be your support and resistance lines, how to properly place them, because there's three different ways of placing your support and resistance lines. So 3 ways of placing support and resistance lines. So the 3 different ways, we have one of them, it's called the gap. One of them is called the touch. And then the last one is called overlap. So what a gap is when you see, let's say, a support line like this or resistance, a gap is, let's say this is the very bottom being support, and then this is the top being resistance. Normally, what people who haven't had training would do is they would put this support right under this area right here. But then on this side, it's like far apart. So what I do is I evenly put it in the middle between both. That's called the gap. So if this was a candlestick, let's say this is a candlestick right here. Even if the wick, doesn't matter where the heck the wick is at, and let's say there's another candlestick over here, wick is out like that. Where I'm putting this line is right in between the middle. Is that like gap? Okay. So there's a gap, then there's a touch, which means let's say there's a support line. I'm perfectly touching like this. Support, resistance. So that's where I would place a line. I'm not placing it anywhere else. This is the one that is more easiest for beginners because you just put it right where it's touching the most areas. And then overlap, so that's support line. So overlap would mean, say if this is support, and let's say this is another area here. So how you would do it with overlap is you get this support line and you put it right in between evenly. So it has like a little extra where it passes through, and same thing with the other side. So it's not completely like down here at the bottom, or it's not completely up here at the top. It's right in between the middle, between both of them. So that's an overlap. So when I do support and resistance, I'm looking at areas where it's just touching the most areas. So it's not even like, I'm not looking to put it right at the wick. There's some people that they just do like right at the wick, and that's it. Like if I was to do that, you could see right here, it's like pass through, which is fine. But what I normally do is I'll put it where it's touching most areas. Evenly aligned, crosses through, we're good. I'll show you guys the example with overlap and gaps and all that. Let me go into the 4-hour. Candlestick patterns doesn't have anything to do with trapping the price that much. That's more, the candlestick patterns we'll go into later on, but that has to do with kind of an indicator that I use. Let's get into that support and resistance. So right here, we can see that price came up, down, or up, down, up, down, up, down. So the way that I would do this support line right here is I'm going to put it right, let me get my terrain line. I'm going to put it right here where it's touching most areas. If you can see, zooming in, I put it where it touched this wick right here. Touch the tip of this wick. It had some overlap right there, but that's fine. Right here it touched. Right here it touched, kind of overlap. Right here it touched. So this line was touching most of the areas. Like over here, it touched fine. Here it touched fine. Here it touched. Here it had some reaction. So that would be like a proper support and resistance line. I'm not going to put this line all the way down here. So if I just put it all the way down here, look at all these areas where it's missing. It did touch over here, but it's kind of missing a lot of areas. So we're putting it where it's touching most of those areas. And that would be a proper support line. Same thing with the resistance, like I'm doing it where touching most of it. So probably do it like right about here. So it touched here, passed through, touched, and touched there. So that would be a proper line. So that's pretty much what like the support and resistance is. You're just gonna want to put it in areas where it's touching the most, and it doesn't have to be at the very tips, just evenly. Like if I did this right at the very tip and then tried doing it, I have like 3 areas here, but if I just adjust my line like this, even though if there was some overlapping right here, instead of it touching 3 areas, now we have 1, 2, 3, 4, 5, 6, 7 areas that it touched. That's why you have to place it where it's just touching the most areas. Let's see, another question we got. So you can mix all 3 gap, touch, overlap. Yes, you can mix them all together. So it just doesn't have to be that. All right, so let's get into tonight's assignment. So it's kind of similar to yesterday's, getting like the higher highs, higher lows. You can mark off the higher highs and higher lows. It's not really mandatory for this next one. It could still be there, even with the markups that you currently have, if you still have them on your charts. Now you're just gonna add support and resistance lines. Not just support and resistance, but getting like getting those patterns for reversals, major market patterns. Like let's say this area right here that I got. So stuff that I want to see is being able to chop the price. So getting like, let's say this right here being resistance. So I chop the price there. Chop the price here like support. Chop the price here like support. Right, so this head and shoulder pattern didn't really happen too well, because you can see this like left shoulder head, or left shoulder head, right shoulder there. Neckline would have been like this. It didn't even break through. But with this, you're just trapping the price and just kind of seeing, getting support and resistance, not just horizontal, but you want to get trend line support and resistance like this. And do this on the 4-hour time frame. And also place these support and resistance where they should be. So not like, not at the very tip, like I mentioned, either gaps, overlaps, all that stuff. So just drawing like support and resistance lines like that. I'm just gonna get this one area here. Let's say the head and shoulder pattern, neckline. You can even spot out like head and shoulder. I'm gonna do right here. Head and shoulder. You can also mark it up. So the prettier it looks, it's gonna show me that you actually took the time. Because some of these assignments, they can take you 5 minutes if you're like me, or if you're just starting off, it can take you up to like 30 minutes. It really depends. But make sure you mark it up, make it clear. Make it clear that this is neckline. And then also the distance from here to here is about the distance that it should drop. So you get that distance, and then you can put right here like target distance hit, something like that. So then I can see that it's identifying that you spotted out the pattern, you see the neckline, and then you see that it broke or it hit its take profit. Also that you know how to trap the price, that you know like support and resistance, and you're drawing them properly. So pretty much those three right there is what I'm gonna be looking at. So not just head and shoulder, it can be reverse as well. You can even spot them in between some of these. Like this right here, I can call this one a double bottom. Double bottom. And then I can do the neckline like this. Actually make this different color. I do this one a different color as well. Neckline like that, distance from here to here is about the distance that it should go up. So then I can right here, actually make these green for the targets that were hit. And target distance hit. Okay. So if you can show me this, this will show me that you understand. If you don't do the homework, promise you won't be able to know if you're getting it right or wrong. So this will kind of give you that accountability to actually get it done. I want to see everyone in here complete it. If you don't complete it, you're going to be in trouble. Just kidding. You're not really in trouble, but yeah, if you don't do it, you know, I'm gonna be able to see how many people actually complete it compared to not completing it. See if you guys are taking this serious. So it's not up to me. You guys already paid for it. You guys already paid for it. Like for me, I actually want to make sure that you guys are on top of it and submitting it. So Physics said, haha, I love it. Awesome, you guys. Well, that's it for tonight. I'm actually taking a screenshot of this just to show you guys kind of an example. What I'm gonna do is I'm going to do some more like writing down some stuff just to make this look nicer for the homework assignment, because I'm gonna post it. So I'm gonna stop the recording for now, but that's it for day 2. Tomorrow we have a good amount of stuff coming up. I know all of this is just getting straight into like teaching you guys a strategy, and you guys start applying right away. So it's a lot more to cover, but we'll see you guys tomorrow. Gonna stop the recording.